And so I hope this finds you well. This is Mr. Shoki. I'm a professional teacher of accounting, business studies, as well as research. If you're watching this, you are definitely at the right place. Please don't forget to subscribe to our YouTube channel by clicking that subscribe button down there. And I promise you that will make your academic problems a thing of the past. With that out of the way, let's get into the lesson of the day. Now, here they're saying that the information was taken from the records of KM Traders. The financial year ends on 30 June 2023, and they're saying that their partners are Adi Kavuma and Team Druli. The business sells wooden tiles, and then you are required to do the following: trade and other receivables notes, current account note, and the statement of financial position. So firstly, I always advise learners to say, for you to know exactly what to do, always be familiar with dates. Dates are very important in accounting. Here we know that they told us that our year ends on 30 June 2023. And then if you look here, they gave us the extract from the financial records of KM Traders on 30 June 2023. So we need to check whether some of these balances have been, because here they're saying that it's 30 June 2023. It means some, if they don't specifically state, will be our closing balance. Okay, so I normally advise that when you answer your question, always check your answer book and check what you are given. So remember, here we are not required to do capital accounts and everything, but on the balance sheet you will be required to do it. So you need to firstly start by showing how did they get this 4,800,000. And if you check here, because they said that capital is 3 million, capital for Kavuma is 3 million, and then for Gluli is 1,800,000. If you add these two, they will give you 4,800,000. So we need to show that in brackets. So we are going to say in brackets, let me just activate the pen. So we are going to say under capital, we are going to say 3 million plus 1,800,000. If you look at this, according to our information, we need to check whether there were some withdrawals on this. So unfortunately, they did not say anything about withdrawals. And then once you're done with this, all you need to firstly make sure that you do is that you have to insert your balances. So let's check the current account here. Because we still have to prepare it, it will mean that according to our information, this might be let's check if they are our opening or closing balances. So you will be controlled by how they've given you the information. So they've given us the balances of the year. So these balances that we have here are the balances for our capital account. If you check, so 1,488,600, I'm gonna insert it on the balance sheet. So for our capitals, because both of them, when you check here, they have a credit balance, so we'll say 1,488 under our current account. We are going to say 1,488,600. Then we'll say plus our current account for the other partner is 741,000. So 1,488,600 plus 741,000. So we have to add the two so that we can get the total. So let's do that. So 1,488,600 and then plus 741,000, it gives us 2,229,600. So we'd have 2,229,600. So we add the two together. So remember, you'll say 1,488,600 plus 741,000, and then the sum of the two will give you 2,229,600. Then you say plus 4,800,000, and then it will give you 7,029,600. So you are done dealing with these two. So let's confirm. So if you say 1 million, then we just go to the balances here. So if you say 1,488,600, then you say plus 741,000, it gives you 2,229,600. Then you add it together with your 4,800,000, then you are good to go. You have 7,029,600. So you already have marks for doing this part. So once you are done with that, you make sure that you continue with your information. This has been recorded, this has been recorded, And then we have drawings from Lulu. So we need to check if the drawings on the answer book, they were already taken into consideration or not. So when we check here in terms of the drawings, the information was already recorded, so there's no need for us to think about that. And then also we have fixed assets at carrying value as a question mark, so it means that it's a balancing figure. So under the balance sheet, what you can do, you can just write your information. So remember here, we are going to have under non-current assets, would have our fixed assets, which is a question mark now, and then we'll have our financial assets, which include our fixed deposit. And then under current assets, we'd have inventories, would have trade receivables, and then we'll also have cash and cash equivalents. And then under this, we have already written under non-current liabilities. Remember, we are going to have our loan, and then here we'll have under our current liabilities, we are also going to have a short-term loan, and then bank overdraft if it's available. And then from there we'll be done. So we'll need to check if this is available here. So now let's go to our information. Also, let's look at what we need to insert here. So here we just have to insert our information. So under trade debtors, you will say, the format says here, less provision for bad debts, and then this will give us net trade debtors. Okay, and then we're going to have our prepaid expenses, and then also our accrued income. So when it comes to this, it's very important that you make sure that you know the structure of everything that you are requested to do. So then from there, we continue with our information. Our fixed assets at carrying value is a question mark. Our inventory is 904,620, so we will insert it in the balance sheet. Inventory 904,620, and then we have our debtors control as 450,000. If you remember, it was already recorded for us. Okay, when we're doing, remember, for this we are supposed to do the notes, so you don't do it in bracket because you're already doing the note. So it has already been recorded for us, so we can just tick it to show that it was recorded. And then under accrued income, we have 62,940. So accrued income 62,940. And then we have our prepaid expenses for 12,600. So prepaid expenses 12,600. And then your bank, which is unfavorable, it means it's an overdraft, it's 166,260. So that bank overdraft will go straight to the balance sheet. Bank overdraft, so it's 166,260. So okay, I've recorded it correctly. And then our cash flow for 21,000 is part of cash and cash equivalent. So under cash flow we'll have that 21,000, and then after this we are going to have petty cash for 9,000. So that petty cash of 9,000 will come here. We'll say plus 9,000, and then from there we check. We also have fixed deposit of 1,350,000. So it will be our financial asset, 1,350,000, and then we have accrued expenses for so let me check. Okay, creditors control, it's 390,000. I think they already recorded it for us. I remember seeing it somewhere. Here it is. And then we have accrued expenses 18,600, also already recorded for us. So it's not a train smash. We continue. Next, we have income received in advance. You know, it's a liability, 49,500. So it comes part of payables. So we'd have that 49,500 here. And then after this, we have loan from bank. I suggest that when it comes to your loan, wait a little bit because you need to get the loan statement. And then we have creditors for salaries, which is part of trade and other payables for 385,000. So that 385,000 will come here. Okay, then from there we can continue with our adjustment. So remember, adjustments simply mean that you need to make some updates. Okay, so here they told us that our net trade debtors is 442,800. So you take it where it's supposed to be in the note. So they said it's 400, and remember, net trade debtors 442,800. So net trade debtors, they said it's 442,800. So it means the difference, it's your provision for bad debts. So let's get the difference between the two. So if you say 400, and let me check if, okay, we'll come back to this. Let me check if there's any transaction that will affect our debtors control. I don't see any transaction that affects debtors control here. So it means we are good to go. So our provision for bad debts will be the difference between 450,000 and minus 442,800. It will give us 7.2. So that 7.2, it's your provision for bad debts, but they won't tell you straight. Okay, so you need to know how to get it. And then after this, we continue. They're saying that a third of the fixed deposit will be on 31 January. When they're saying a third, they're talking about one. So it's one third. A represent a single thing. So it's one third. So meaning that it's 1/3. So they could have said maybe a third, one third of the fixed deposit will mature on 31st January 2024. So remember, our year ends in if I remember, it ends in June. So if you count from July, August, September, October, November, December, January, it's within the next 12 months. So it means that is your short-term fixed deposit. So if you take 1,350,000 and then you multiply by 1 divided by 3, it's going to give you 450,000. So it means you need to take it out of the short term, out of the long term fixed deposit, and take it to short term. So this 450,000, we'll take it out here and we bring it to cash and cash equivalents. Okay, then we are done with that transaction. Next one, they're saying that details, okay, let me check if we recorded everything. Details of one employee were omitted from the salaries journal for June. So this is that transaction that has got creditors for salaries. So here, what you need to do in the balance sheet, remember, you record creditors for salaries, which is you record your net salary as creditors for salaries, and then deductions and contributions, you add them together. Okay, so here they're saying that the payment will be made in April 2024, the next financial year. So this person was not paid, so obviously we will need to pay them. So what you need to do first, get the net salary. So our net salary will be when we do this, our net salary will be 20,000. Then you subtract 1.5, and then you also subtract 7,000 for payee. It gives you 11,500. So we are going to have to say when we record this under payables, we are going to say plus 11,500, and then plus remember those things, deductions and contributions should also be recorded, plus 1.5, and then plus 7,000. Okay, and then plus 7,000. Other learners might opt to record the entire gross, but I suggest that you show your things separate. Okay, so we are done with this. Let's go to the next information. And then after this, they are saying that the loan statement from African Bank reflected the following: balance at the beginning and the balance at the end. Now, if they tell you that interest is capitalized, it means they've already taken into consideration the interest and the payment. So what you can do to get the loan repayment, as long as they're saying that it is not changing, you can just check the difference between your opening and closing. It will give you your current portion on loan. If they are saying that it will be reduced or increased, that's when you increase or decrease by that particular percentage or amount. So to get our short-term loan, uh, there are two ways. You can check for the difference between your interest capitalized and then your repayments that include interest. But I personally prefer, when it's capitalized, I prefer to use the closing and opening. Okay. So let's do it like that then. So your short-term loan will be, let's check what was the balance at the beginning, 3,240,000. And then I'll subtract the balance at the end, which is 2,880,000. And then this will give me my current portion on loan. So let's check how much do we get. So 3,240,000 minus 2,880,000, it is giving us 360,000. So it means that our current portion on loan is 360,000. So under our loan, we will take our closing balance, which is 280,000. Then we subtract the current portion, which is 360,000. Then it will tell us what was the loan that we are supposed to have. So 2,880,000. Then I subtract 360,000. It gives me 2,520,000. Okay. Okay, let me write it properly. So with balance sheet, basics are very important. So I have 2,520,000. Even here, I'll write 2,520,000, and then I'm done with this. Then we can go to other adjustments. So next, they're saying that Mdluli took trading stock for personal use. Very important for us to note that he took trading stock for personal use, and they're saying that the selling price of the goods was 41,400. The cost price of the goods was 27,600, and they're saying that this was not recorded. So here you need to remember that the first part, before you go to the partnership agreement, you are dealing with the things of the business, and then the last part where they start to mention the partnership agreement, you are now dealing with the things of the partners. So here, what was really affected is the value of our trading stock. So we need to subtract 27,600 from our inventory. So we go to our inventory and say minus 27,600. Okay. Then once you are done with that, you will then go to, okay, so once we are done with this, if you look at this, it will show you that in terms of your balance sheet, you have everything that you need. So I suggest that when you do something like this, always close up your balance sheet first before you go to the current account, because your balance sheet has got many marks. So we'd have 166,260, and then let's add our trade and other payable. So we'll say 390,000 plus 18,600, and then also plus 49,500, and then plus 385,000, and then we say plus 11,500, and then we say also plus 1.5, and then we say also plus 7,000. It gives us 863,100, but we will confirm this. So you have 863,100. So let's see, 390,000 plus 18,600 plus 49,500, and then plus 385,000, and then plus 11,500, plus 1.5, and then plus 7,000. It still gives us 863,100. So we can simply add our what do you call it, our current liabilities. So our current liabilities will be 863,100 plus 360,000, and then plus 166 260. Let me just confirm from the information. 166 260. Yes. Okay, so the sum of the two gives us, of the three gives us, so remember we said 863,100 plus 360,000, and then we also said plus 166,260. So it gave us 1,389,360. Okay, so let's see again. 863,100 plus 360,000, and then plus 166 260. It's 1,389,360. So it's fine. So if you look here, we have owner's equity, liabilities. We have owner's equity, non-current liabilities, as well as current liabilities. So we can add the three. We are going to say 7,029,600 plus, let me do this so that it can be easy for me to see, 2,520,000. So I'm going to say plus 2,520,000, and then I'll also say plus 1,389,360, and then it is giving us 10,938,960. Okay, so let's confirm again. 863,000, let's see, 7,029,600 plus 2,520,000, and then plus 1,389,360, 10,938,960. So there's a rule that says assets equals to owner's equity plus liabilities. So the assets, total assets and total equity and liabilities should be the same. So I'm going to put it here, 10,938,000, 938,960. So okay, then we can finalize. Remember, fixed assets is a question mark, so we need to work it out. So let's start with our inventory. 904,620, 904,620 minus 27,600. It gives us 877 and 20. So here we get 877 and 20. Let me use a black pen here. So we got 877 and 20, right? So now we need to go back and close up our cash and cash equivalent. So if we say 21,000 plus 9,000, then plus 450,000, it gives us 480,000. Okay, so we're going to say 21,000 plus 9,000, and then plus 450,000. So it gave us 480,000. So we are good to go. Then let's get our 1,350,000. Then we say subtract 450,000. We are left with 900,000. So we are almost done with our balance sheet. Okay, so we are left with 900,000. So now we need to close up our trade and other receivables so that we can transfer the information. So under prepaid expenses, we are still going to have that 12,600, and then under accrued income 62,940. So to close up this note, we are going to say 442,800, and then we say plus 12,600, and then plus 62,940. It gives us 518,340. So let's confirm. So if we say 442,800 plus 12,600, and then plus 62,940, it gives us 518,340. So that 518,340, we bring it under receivables, 518,340. So even if maybe you did not get something right, bring it as it is. Okay, so we'll say 877 and 20 plus 518,340, and then plus 480,000. We are getting 1,875,000. So we are getting 1,875,360. So let's check. 877 and 20 plus 518,340, and then plus 480,000. It gave us 1,875,360. So if we take our total assets, 10,938,960, we say minus 1,875,360 is going to give us 9,063,600. So we'll have 9,063,600 as our non-current asset. So if we take it and say minus 900,000, it will give us 8 million. So our fixed assets will be 8,163,600. So let's see how many marks were allocated to the balance sheet. 30 marks is a lot, guys, and if you check, majority of the marks came from just basics and also knowing how to move the figure. So let's do the last 7 marks of the question. So now next, let's go to the partnership agreement. Next, they are saying that the partners are entitled to the following salaries. Kavuma is 66,000 per month. So we need to check if Kavuma has been given his salary per month. So they did not give him. So if you say, remember, these people are working for the entire year. So if we say 66,000 multiplied by 12, it's 792. So we'd have 792,000 here. Okay. And then next, what are they saying? Truly, we gave him his salary, so it's fine. Interest on capital is calculated at 10% per annum on capital balances. Note Mdluli increased his capital by 480 on 31 December. So for Mdluli, this is what we need to do. Mdluli's balance, capital balance at the end of the year. Remember, they said he increased his. So if you check the date, they said he increased his salary, his capital contribution by 480 on 31st of December 2022. And when we check the information here, it shows you that these are the balances at the end of the year. So for Mdluli, it means when we started the year, he had 1,800,000 at the end, not at the beginning. So to get the opening balance for that, you will say, if you say 1,800,000, and then you say minus 1,800,000, you say minus 480,000, you have 1,320,000. Okay, so meaning that we need to calculate for the time it was 1,320,000, and then for the time his capital was 1,800,000. So the increase took place at the end of December. So it means before, we need to count from July up until December. So July, August, September, October, November, December, it's 6 months. So it means we are going to say 1,320,000 times 10 over 100 and then times 6 over 12. And then here we'll do the same, 10 over 100 and then 6 over 12. Okay, so let's do that quickly. So 1,320,000 multiply by 10 divided by 100 multiply by 6 divided by 12, it gives us 66,000 here. And then on the other side, when we say 1,800,000, let's see, it gives us 90,000. So here we get 90,000. So if we say 66,000 plus 90,000, it's going to give us 156,000. So this 156,000, you are supposed to bring it under his interest on capital. Okay, and then next they want you to calculate the remaining profit. So they said the remaining profit or loss is shared between Kavuma and Gluli in the following ratio. So Kavuma gets 5 and then the other partner gets 3, all of them out of 8. So we want the one for Gluli. Gluli gets this one got 5, this one gets 8. So if I want that, I can just say 195,000 multiply by 3 over what they give for this partner is 5. Okay, so let's see. So 195,000 multiplied by 3 divide by 5, it gives me 117,000. But I want us to confirm this. So maybe what we can also do is to reverse this. So if we say 195,000 divide by or multiply by 8 divided by 5, it gives us 312,000. So if we say 312,000 minus 195,000, it still gives us 117,000. So let's check if there's anything else that we need to fill on this. So according to this, when I check, there's nothing else that we need to fill. In terms of bonus, they did not say anything. I don't see anything about bonus. I don't see anything. So we can't give someone a bonus when they have not said anything. So it means that other partner will get nothing for bonus because they didn't state it. Okay, so now this is how, guys, you are supposed to do this balance sheet question. And then I want to show you how long it was supposed to take us. They said we were supposed to do this for about 42 minutes, so we finished before time. Thank you so much for watching, guys. If you want me to become your personal tutor, you're more than welcome to use the details that are available in the description of this video, or you can simply call us on or text us on 0730363208. Shalom.